Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, June 23rd, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Glad to be back in the video pilot seat after a very nice vacation, and the fella's doing a fantastic job filling in on the videos and a lot of help on portfolio management as well. Great to be back, though. This is what I'm passionate about. This is what I wake up every morning and look forward to. So today is Tuesday, June 23rd, as I said, and the state of the market is in an uptrend. Original follow-through day on 4/8, we had a correction and then another follow-through day back in June. And let's check the trend gauge over here. After not doing these for 2 weeks, I might be a little bit choppy today. Not smooth out of the box right here, but I'll get in the groove. Market leaders took off the green sub arrow as AI leaders got absolutely smacked today. So we're back to neutral here. Want to note though, none of the 21 over 21 broke their 21-day moving average today. That tells me two things. One, with the several in the high single digits or low double digit drawdowns. They were very extended from their 21-day moving average. And it also tells me that if I had to guess, I would look and see that the equal weight S&P had a pretty decent day today relative to the S&P, and we'll get there in a second. We are introducing the yellow sub arrow on short term as the S&P 500 and the NASDAQ 100 very heavily weighted in tech names. Those broke their 21-day moving average today. So yellow sub arrow on short term. As far as medium term, 50-day moving average, long term, 200-day moving average, all fine there. And remember, the market never gets into serious trouble unless we break that long term 200-day moving average. We're normally 8 to 10% off the highs when we get down to that level. So what happened today? Week overnight. It starts two of the big DRAM names that are, or memory names, however you want to call them, uh, trade on the South Korea exchange, and there's a lot of eyes on them overnight, and they got hit. There's several reasons why. One of them may just be profit taking ahead of Micron earnings, but there's also some political rumblings about taxes for excessive gains on those stocks. But whatever the reason, that kind of led the way to weakness in semiconductors, memory names. That trickled over to fiber optic names. And bottom line is the AI sector got smacked today. Not as bad as it did a few weeks back, but nonetheless hit pretty hard, and it was enough to take the S&P and the NASDAQ below their 21-day moving average. Here are the numbers on the day. The 21 over 21 down an average of 3.5%, 7 up, 16 down. The Turbo 12 down 5.3%, 2 up, 10 down. The Mag 7 only down 1.37%. The Mag 7 has been looking absolutely terrible. But these AI non-Mag 7 names are playing a much bigger role in the S&P 500 and the NASDAQ 100. The RG8s, our 8 growth ETF composite, down 2.25%. The Revere AI 100 down 4.8%. S&P 500 gap down 1.5%, rallied in the morning, sold back over lunchtime, chopped in the afternoon, closed basically where it opened, down 1.44%. But here we've got the RSP, and this is important. It tells us that money wasn't fleeing hand over fist out of the market. It was rotating from growth into value as the RSP, equal weight S&P 500, down just 0.12%. For some comparison, the growth half of the S&P 500 SPYG down 3.1%. The value half SPYV down 0.1%. So money moving from growth into value, is that a harbinger of further sell-offs? We'll let the market tell us. answer that question going forward. NASDAQ 100, nasty, gap down 3.4%, closed down 3.5%. Equal weight NASDAQ 100 down 2.2. Dow just a smidge negative, down 0.1%. Mid caps down 1%. Russell 2000 down 1%. Relative strength in those two areas recently continued. Global 60/40 down 1.14%. International and emerging markets hit hard on overnight as well and in trading during the day. Our flagship GROTECTION portfolio down approximately 2.22%. TurboTection down 1.97%. Let's get into it, and we will start, as we always do, with the indexes here. And this volatility pickup is not beneficial to the way we trade stocks. But let's go back. We had a really hard a lot of things have gone on recently over the last 2 weeks, starting with a big break of the 21-day moving average on June 5th. AI stocks got smacked that day too. Inside day failed into the 21, and then 3 days testing the 50-day moving average. We then had the memorandum of understanding on Iran, and we bounced hard off the 50-day moving average, including a gap up on Monday, 6/15. Then 2 days after that, we had the Fed, 6/17. Not a good initial reaction, broke back below the 21-day moving average. Overnight, things reconsidered a bit. We had a gap up in a tight range. Thursday, then, and market closed for Friday, Juneteenth. We had a higher high outside negative reversal on 6/22. That was yesterday, Monday. And then overnight, what we're seeing here, this ugly candle closing near the lows of the day, breaking the 8 and 21-day moving average, but holding the 50-day moving average. So what do we look for now? Obviously, today's lows in any particular stock that you're looking at, and also the indexes relative to the 50-day moving average. We're quite a bit above, a couple hundred points above the lows. Actually, it's less than 100 points now, where we made the lows these 3 days in a row before bouncing off the 50-day moving average. You really don't like to see the 50-day tested again this quickly. Below the 21, above the 50, so we're pinched here. Today's highs and lows critical. We'll be watching the overhead resistance of the 21-day moving average, the underneath support of the quickly rising 50-day moving average. That's what we'll be watching on the indexes. And then, of course, individual names, they stay in the portfolio. They've all got their individual stocks. They stay based on their merits or lack thereof. And we will review portfolio holdings during this video. RSP, equal weight, S&P, undercut and reclaim the 21-day moving average. This has been showing relative strength over the last month plus. Made a new high last week, pulled back a little bit, really where it was on 6/17. Certainly seeing money rotating into this today was a nice thing to see for the market, as again, that means that money's not flowing hand over fist out of the market, but rotating into these sectors. And with our GROTECTION rules come out in the fourth quarter, version 5 of them, we will have a plan for hedging or preparing for these harsh sell-offs using a combination of ETFs featuring XLP. This is what we're looking for, is ETFs that go up when growth is selling down hard. XLP is one of them. Two others are SPLV. This is low volatility. Money flows into here for safety. And these would be seen as short-term trades, of course, unless the market decides that it's going to go lower, in which case these things tend to outperform in weak markets. SPHD is high dividend, low volatility. VTV is a Vanguard Value ETF. You can see that trending nicely above the 21-day moving average and showing some relative strength. And then SPYV I mentioned earlier. showing relative strength today as money flowed from growth into value. Let's look at SPYG, the growth half, for comparison, and you can see that breaking below the 50-day moving average today. So always working in the lab at Revere here to improve returns and developing a playbook for rotation on these difficult days when growth gets sold hand over fist. So back to the indexes. Let's go to the NASDAQ 100. I kind of got off on a tangent there, but you can see breaking this green line here, NASDAQ 100 down 3.3% on the day, ugly day. Um, I'm getting mixed signals here. I believe it was down 3.54% on these charts. Looking on my other screen, I'm pretty sure it was, but either way, you can see where it closed below the 21-day moving average. So now tomorrow we'll focus on the 21 overhead as resistance and the 50-day moving average below as support. Let's move on to the Dow Jones Industrial Average, and that bounced off the 8-day exponential moving average, showing some nice relative strength over the last 3 weeks. And again, that's growth, weakness, value, strength. And I noticed that Verizon is getting kicked out of a headline after the close. Verizon is getting kicked out of the Dow, and they're putting Google in. Uh, if you follow this, normally you want to buy the stock that gets booted out and not the one that gets added, but that's a whole different topic for a different day. Let's go to the final indexes, the mid cap 400 here, bouncing off the 8-day moving average, again showing relative strength over the last couple of weeks, and the Russell 2000 small cap down less than 1%, also showing relative strength over the last 4+ weeks. So those are the major indexes. Let's take a look at some interasset correlation tickers, and we'll start with the VIX. We don't like seeing this big spike up on the VIX, up 13%. Uh, back 19 and a half is about the long-term average on the VIX. You can see how we had a lot of volatility 2 weeks back before it calmed down a bit. Don't like to see that spike higher. And we've also seen increased volatility on the S&P 500 average true range on a daily basis. That's also considered a negative. Let's go to the dollar index. This is another negative, and that is you can see this making higher highs. And in an uptrend, strong dollar is typically seen as weak for U.S. stocks. How about precious metals? Dollar is also weak for precious metals. Strong dollar weak for precious metals. You can see gold near lows from 2 weeks ago, down 1.9%. Gold stocks down 4.6%, just in a downtrend. There's times to own these and there's times not to, and now is a time not to. Silver making a lower low, and Bitcoin has also been weak. Again, there's a time to own it and a time not to, and we've been staying away from these since they kicked into their downtrend mode. Let's go to bonds now. Broad bond market, not a lot of movement in bonds today. You can see BND barely ticking higher, TLT barely ticking higher. So rates not really changed much. Now, um, when you wake up in the morning, and of course I'm checking the futures overnight as I toss and turn occasionally, and you see things going lower, the first thing that you want to look for is, are bonds impacting that, or is oil impacting that? And neither of them were. In fact, they were fine. So that news out of South Korea kind of kicked it off. Micron earnings on the horizon, probably causing, after a big move up, probably causing some angst in a few people. You can see that down 13% today, bouncing after hours. But we'll see what happens with their earnings report, but we'll also see what happens across the broad market and across the other components of AI, as that has been the leading trade. Let's now go to the tail of the tape. If I can find it, there it is. So What do we want to point out here? Stochastic indexes are mixed, with the S&P 500 and the NASDAQ 100 negative, and the others either neutral or positive. RG8, a mixed bag as well, mostly neutral. The NASI, the McClellan Summation Index, neutral. Dollar rising, that's an up arrow, but it's red because it's generally not considered good for the market. Bonds, TNX yields just going sideways in a long consolidation, and percent of stocks above the 5-day, both below 50, 48% on the S&P, 31% on the NASDAQ. So we've got some room to move higher there. Watching this bear case below the 21-day moving average today, watching for a second close below tomorrow. I mentioned Micron earnings, and Thursday morning we've got inflation data with the PCE. So the keys coming into today, 8 EMA and the 21 EMA broke them both. That's a negative. Same thing on the NASDAQ 100. Russell made an all-time high yesterday, pulled back today, and it's above the 21-day moving average. Day count, 2-day consolidation to 1 day down. This close below the 8 EMA and the 21 EMA were enough to turn the slopes of the lines lower as well. First close below there, the 8 and the 21. Uh, let's see that ATR, 1.25%. That's highlighted in yellow. That really needs to stop and consolidate. We follow this very closely. Um, Sectors today on the upside, bunch of value sectors: energy, financials, staples, utilities, healthcare, real estate. To the downside, um, basic materials and industrials, as well as the three tech spider sectors: semiconductors, memory stocks, fiber optic stocks, international and emerging markets, all hit on the day. Portfolios stopped on Marvell in GROTECTION, and also stopped on SPXL. This was started on a move back above um, the 8-day exponential moving average last week when we reclaimed it, breaking that hard today. And I have not updated these numbers here, so let me give them to you. The RVAB is accurate for GROTECTION, 1.39%. The stocks portion, 1.23% to the downside. The rest of that, if you added the stocks and the indexes, the total balance at risk is 5.03%. TurboTection bought Crowd and Twilio, put on a hedge or a short on semiconductors by buying SOX S, and stopped on Frog. Turbo RVAB is 1.23. That's our volatility adjusted beta. And as far as the stops go, 3.19% on the stock side of a total balance at risk of 6.03%. Sorry I didn't get those updated beforehand, but now you've got the accurate numbers here. So what does this mean? It means what's our volatility adjusted beta versus the market? One is if you were in a portfolio of 100% the S&P 500. So you can see we're still allocated with more risk than the S&P 500. And then, of course, if all of our stops got hit, GROTECTION would suffer a 5.03% drawdown, and of that, 1.23% would be of the stocks of all of the individual names that were listed. And we're going to go through the charts of these names here in a minute. And on the turbo side, 3.19% for stocks, 6.03% for the index portion. So the bottom line on the day, AI stocks smacked. We've seen this multiple times. They're usually pretty resilient and come back within a couple of sessions. We'll keep an eye on whether or not that actually happens. Micron earnings might have a lot to do with that tomorrow after the close. So keeping an eye on that. S&P 500 and NASDAQ 100 breaking the 21, first close below, and very clearly money rotating into value. This is why we own the S&P 500 as a big core percentage of the portfolio because all of that rotation within sectors takes place within the S&P 500. You can see how money just flowed from the growth sectors as well as basic materials. Copper really got hit hard today. It flows from the typical growth is XLC, XLK, XLY. That's communication services, technology, and consumer discretionary. Uh, Add in basic materials and industrials today, but money flowed into XLE. That's energy, XLF, financials, P, staples, U, utilities, V, healthcare, and real estate. So bottom line on the day, as I said, AI stocks smacked S&P 500 below the 21E. See if we get a second close below there. See if the S&P 500 50-day moving average provides support on any further pullback, and see if the rotation in the values into value names continues. So the keys for Wednesday, we'll be watching resistance overhead at the 21, 50-day support. Same thing for the NASDAQ 100 as the S&P, and then the Russell all-time highs and the 8-day moving average. So Russell in a much better technical position than the S&P and the NASDAQ. And let's take a look at this MAGS chart. This is the MAGS 7, and you can see how awful this has been. It's actually a little surprising that the S&P and the NASDAQ 100 don't look worse than they do with this breaking the 200-day moving average. But this is just a testament to how these AI stocks, memory names, semiconductors, fiber optic, all of the component names are really playing a much bigger role in the indexes relative to what these mags are doing. It's really they're holding their percentage of the portfolio, but as the top seven, but the next 493, there's a huge chunk of them coming up closer to those seven. So let's do a portfolio review now. We will start off with what got stopped today on GROTECTION. So Marvell breaking the 8 EMA. That's kind of a tight stop, but that was the plan when we bought it. Normally, we size our entries against either the 8 or the 21-day moving average. You can see how when this trends higher, it holds above the 8 EMA very nicely. Clear break below, flip over of the slope of the line on the 8, and also this light blue, which is a 5 simple, and just got stopped. They don't all work. Let's see what else. Let's go through what is in the portfolio for GROTECTION. We'll start off with, in addition to the index holdings, WGMI, this is holding up very nicely. Bounced at the 21, regained the 8. That's the only ETF in there. And then we've got 10 stocks. We'll start off with the biggest holding, Intel, a clear leader. All three buys in the positive on this and holding up very well. Down 6% today, but that's after this strong move up, you got to expect some give back. So not really concerned about that as of yet. Next up is Nebius, and wide range on this today, but undercutting and reclaiming the 8-day moving average. Guardant Health, closing mid-range, was strong all day, sold off a bit into the close. Very tight action for 3+ weeks here. This really needs to get out. There's such a thing as being too tight for too long, but it's nice to have some healthcare names diversifying away from the AI names in the portfolio. GHBE is next. Now we took an offensive trim on BE yesterday, and this is why we do it. These are very volatile stocks. Gap down double digits, bounced right at the 8-day exponential moving average, ended up down 7% on the day, but we actually sold this at like 341. So $20 gain by doing this offensive selling at this point. Now, the critical thing is, will we buy it back at the appropriate time? Will the market give us an appropriate re-entry? and stop with some of this volatility that we're seeing on all these AI names. That's probably not going to stop, but that's why we have RPRP rules. That's Revere positional risk parity. We size our positions based on the ATR and the beta of each individual name. So each stock has a maximum size that they're willing to go in as a way we balance risk across the portfolio. NVT sitting right on the 21-day moving average after making a new high yesterday. A rough day for this one today. We own LLYX, but we're using LLY to make our decisions on it. Undercut and reclaim the 21-day moving average today. Normal pullback so far, right at the top of this nice base that it formed. Just barely holding the pivot minus 8% level today. So we really want to see this get up and out or some money flow into it if we see continued weakness in AI type names. Fortinet tight for 3 weeks as well. Decent day on this. Hood bought yesterday. The theory behind this is you can see the clear relative strength over the last 3 weeks, but with the SEC suspending the pattern day trader rule. This means that people with smaller accounts can do as many day trades as they want to. Robinhood is a natural spot for that type of investor. They showed a big increase recently when they reported their number of trades and active users. So that's the theory behind this, but of course it needs to hold. It was sized against the 8-day moving average for the initial buy. HUT added last week, undercut and reclaim the 21-day moving average. Form sitting right on the 8-day in a nice flat base. And finally, Credo, we did an offensive trim on this yesterday at 304. So got some good gains. You just have to you can see how these things trade. You just have to take some gains when they get really extended to the upside. Buying breakouts or higher highs on these has been a sentence to get chopped to death. So sometimes you just got to take some profits off when the time is right, when they get extended 2, 3, or 4 times above the 21-day moving average is what I look for. All right, on to TurboTection. So the transactions today added Crowd, nice bounce off the 21-day moving average. Added Twilio, nice bounce off that 50-day moving average. Very clear stop levels on that. Semiconductors, here's SOX. This is a really nice setup for a short with a stop above today's highs, which coincides with the ADMA and the 5 simple. Very easy stop out on that, and some nice hedge for some of the active stocks that are owned in TurboTection, and stopped on Frog today. As you can see, it bounced at the 21, but the stop triggered as it really hadn't made much progress. So let's go through the full portfolio here. LabU, a lot of money flowing into biotechs, and this is a beautiful breakout. LabU is what's actually owned, but we make decisions based on the underlying, which is XBI. And you can see the very nice breakout of this flat base on here. I'm looking for some sort of a minor pullback to add this to the GROTECTION portfolio. On to the individual names. Datadog hanging right around that 21-day moving average. Really need to see it move off of this, or Ted and Connor will stop out on it. Nokia bounced at the 50-day moving average today. We already showed BE, that's owned in GROTECTION. We showed Crowd and Twilio. We showed Nebius, which is also owned in GROTECTION. And still holding Marvell. They had a better cost basis than I did, as I got stopped and re-entered on this pullback. So Ted and Connor still holding this using the 21 as their stop there in TurboTection. They also own Intel, which we just showed as well. So a lot of overlap in the portfolios Currently, that's not always the case, but it is right now. And with that, I'm going to wrap it. As always, like to hear from you. The email's don@revereasset.com. I'm on Twitter at dvandenbord. Feel free to comment in YouTube. We answer all the comments, and please like, share, and subscribe. We've got a daily goal of 1,000 views and 150 to 200 likes. Um, so we would appreciate it if you would like, share, and subscribe on social media. Reminder, what is Revere all about? It's all about not getting smacked in the back of the head with a 4x4 by losing 15, 20, 30% of your portfolio. Our entire mission is to protect the downside, and the upside takes care of itself in uptrends. This has cost us some returns this year as we got stopped right at the bottom here. Um, Last April, we went another 10% lower. This April, not so much. So a little bit of lagging on our returns versus the S&P 500 on this turn here, but that's the price that you pay for not having huge losses in your portfolio. There are times when you will lag, and there are times when we will strongly outperform. So basically, a day like today, being over invested because we're above the key moving averages, see some things come off as we break the short-term moving average, but we've got stops in place for every holding, and the key levels now to watch are that 50-day moving average on the S&P 500 and the NASDAQ 100. That's it for Tuesday, June 23rd. I'm Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.